All right. Welcome, my fellow profit seekers and capitalists. I am your growth stock guru, Rick Action Jackson. It is Thursday, July 30th. Thank you for joining us. First, let me state this program is for education and entertainment. This is not stock advice. I am not a licensed financial advisor. If you find any of these stocks interesting, please review them with your financial advisor first. Make sure they're appropriate for your age, your risk tolerance, and your financial goals. I'm just here to give you some information on the stocks. Make the decision on your allocation with a professional, especially if you're new to stocks. Stocks do have risks. You can lose money. Okay, we got three names today that I have a buy on all three. Two of them are upgrades under my top quintile strategy. They were holds. Now they're buys. And the third one has been a buy for a while, but it's on a pullback. It's a great time to buy it. So first name is Apple Computer. Yes, I think any of you that play the stock market have heard of Apple Computer. Largest company in the world as far as market cap, largest company in the S&P. They are approximately 7% of the S&P 500 index. Why am I recommending Apple here? Why not? Let's go to the chart. Why not recommend it when it was under 300 just a month ago? Well, if I wasn't a bonehead, that's what I would have done. But I have stayed away from Apple since it got up to about 250, 260 over 10 months ago. And let's go to the 5-year chart. I had first started buying Apple 12 years ago. I actually have some clients whose cost basis is under $5. And I've been a big believer in it for a long time. I felt until they had a new phone that they could get people to upgrade to, the stock wasn't going to do much. And in my defense, the earnings for Apple have not been anything incredible for the last 24 months. They have managed to grow their revenues 7 to 9% and their earnings 10 to 15%. Nothing wrong with that. But there's a high multiple on Apple. And you get high multiples for two reasons. One is you've got a business that's almost bulletproof. Apple's pretty close to that. And secondly, you're growing way above average. And 7 to 9% revenue growth is not above average. So I've stayed away from it. Why am I getting back involved today? I've heard a lot of rumors that I believe over the last few days that Apple finally has a game plan on a knockout upgrade phone. They're going to be coming out with their AI-enabled phone probably somewhere between September of 2027, and there's a small chance they'll launch it or at least start taking orders for it at Apple World this September 2026, although I think it's more likely that they start talking about it and or launch it at the Computer Electronics Show in January of 2027. Now, everything I'm about to tell you is not from Apple Computer. It's from sources of rumors that have come from their suppliers, but I hear that this is what's going to be their next latest and greatest phone. It's going to be the Apple AI phone. It's going to have a slimmed down version of Google's Gemini on it. And, these LLMs, these long language models that operate AI software, they eat up a lot of bandwidth. And for cell phones, that's going to be a challenge. You try to do these things on your cell phone, if they're a long and complicated answer, you're probably going to lose the signal on your phone before you get an answer. Apple thinks they've cracked the code on this. The Gemini, the version of Gemini that they're putting on the phone only does about a third of what the Gemini on the Google website does, but it's the third of the functions that complete 70% of the requests. So most of the things you turn to Gemini for to get an answer is going to be available on the phone. They're going to put 16 terabits of memory or 16 DRAM chips on the phone. DRAM is very expensive these days. So this phone is going to cost, I'm told, about $3,500. But it'll be the only phone on the market where you can actually do AI applications on your phone. Typically when Apple releases a hot new phone, about 15% of their total existing phone customers will upgrade in the first year. And if it's a really hot and popular phone, more than that. Well, at $3,500, if Apple only gets 8% of their existing phone users to upgrade, that's going to generate $210 billion a year. That basically grows the company 40%. And the existing age of an Apple phone right now is the oldest it's ever been. For about a decade and a half, people would upgrade their phones every 3 years. The average Apple phone out there is 4 years and 10 months, and it'll easily be over 5 years before this phone's available. And I think there's going to be a lot of excitement and buzz around this. Now, the rumor of this phone's getting out there, so the stock's been picking up. But the only thing that kept me from putting Apple on my buy list was I couldn't find a target that was more than 50% higher. And that's what I always want to see. I always want to see there's at least 50% upside in 2 years and 100% upside in 4 years, or I'm not interested. I don't care how good the story is. Well, I did the math, and right now Wall Street's only looking for Apple to earn $11 a share in 2027 and $9 this year. Apple has a great track record of beating the estimates. They've beat them something like 14 of the last 16 quarters, and half of the beats are by a lot. And if they're going to charge $3,500 for this phone, and they get 7% of their existing phone users to buy it, we're talking an enormous uptick in revenue, somewhere in the neighborhood of 25 to 40%. Apple does now just under $500 billion a year in revenue. A third of it is services. So $300 billion is all their hardware, and over 60% of that hardware are phones. So they're currently doing about $120 billion, and I estimate that this new phone is going to do $200 to $300 billion, and they've got a lot of other less expensive phones they'll still be selling. There's an enormous spike in revenue that's coming when this phone gets launched. The rumors are getting out. It's no secret. And Apple's the type of stock where if you're a professional money manager, if the stock's moving, you got to own it because it's 7% of the index. And if you're trying to beat the index, not owning a stock that's going up a lot, that's 7%, really hurts your comparative performance. So I don't expect Apple to look back. If you can get it under 350, my 2-year target is 510, and my 4-year target's 800. And if you don't own Apple Computer, buy it. If you do own it, but you don't have 7% of your portfolio in it, buy it on the next dip. It's making new all-time highs here. When a stock like this breaks out of a big, long base and makes new all-time high, Alan Shaw used to teach us the bigger the base, the bigger the upside space. I could see this stock running to 400 and not having a pullback. But could it pull back to 350, 360 after it gets to 400? Maybe. Maybe if the new phone's not out by September or January, then yeah, it probably will. But if the new phone is out by then, or if they're taking orders then, which Apple's done a lot before, they'll take orders 2 or 3 months before the phone's actually launched. I think this thing runs to 400 and doesn't look back. So Apple Computer, AAPL, I don't want to chase it past 360. I would definitely buy it here at 340 if you don't own it, or 343. But with this new phone, I think it's going to cause a lot of analysts to raise their estimates. So I'm not going to wait for the phone to come out. I think now's the time to buy it. All right, let's move on to our next name. This is one of the most exciting stocks I know, and it's on a pullback you should take advantage of. It's headquartered in Europe. It's called Argenx. The ticker is ARGX. Now, this is a biotech company, and they already have a number of drugs on the market selling very well. They have 2 blockbusters that are in development that either one of them could easily double the company in 2 years. I could spend the whole show talking about their pipeline because, in my opinion, they're in the greatest business in the drug business. Most of the illnesses we get, whether it's cancer or some kind of disease, it happens because our natural immune system breaks down. But they're making enormous breakthroughs on how to replace an RNA or a DNA strip in your DNA that is defective. And since it's gone defective, it's no longer triggering peptides and amino acids to be made that are necessary for your immune system. This company focuses on repairing, with the CRISPR method, those RNA and DNA and those peptide producers. The CRISPR method is a breakthrough they had in biotechnology about 7 years ago, where they've figured out how to give you a 2-shot injection to fix your DNA. The first shot labels your defective DNA like a flare. And then the second shot, the proteins put into your bloodstream are trained to find that flare, to disengage or cut out the DNA you have there that's not working, and replace it with RNA or DNA that has not been damaged. There's 2 drugs on the market today that use that method. There's going to be hundreds of them over the next 10 years. And most of us would never get cancer if we kept our immune system healthy. Most of us would never get asthma. There's a long, long list of diseases where if your immune system stays healthy, you're not going to be bothered by that. And here's the best part, boys and girls. If you repair your immune system with this drug, you got to take this drug till you die. So we're talking major money makers. If they find defective RNA or DNA in your body in your 40s and make you very susceptible to colon cancer or breast cancer, and you have a chance to take a shot or a pill every month for the rest of your life and make you bulletproof to those illnesses, doctor, where do I sign? That's where this company's going. And the reason the stock has pulled back is they bought another company 3 days ago. They paid $2.1 billion for it. They have a lot of DNA data on other human beings. This company has data on about 80 million humans. The other company has about 30 million. The more data you have on the global population's DNA, the better you are at pinpointing the RNA or DNA protein that's defective, on what's triggering your immune system not work. So they just increased their research capabilities by 30% for $2 billion. In my opinion, it's a bargain. I thought the stock was going to be up 40 points when I heard the news, but stocks traditionally go down when they make acquisitions because now the company has $2 billion less cash on the balance sheet, but they have a lot of cash. They don't need that. They're going to raise over $2 billion in cash and earnings within the next year. And so where is this stock going? Well, I have a target of 2,000 for December of 2028, and I have a target of 3,200 in December 2030. How do I get there? I'm using a 40 multiple. The company currently has a 35 multiple. A company like this that is in one of the best money-making areas of biotechnology, because everybody has an immune system, and half of the public of the planet winds up getting sick in their old age because part of their immune system breaks down. This is the ultimate market. So the opportunity with this company is huge. They already have a family of drugs that try to prevent lung cancer and try to cure asthma. And they have 2 more coming out. One's going to be for breast cancer. One's going to be to help prevent colon cancer. And then they got another 6 drugs coming up behind them. This stock's going to be a monster. I consider this a core holding. They have beat the numbers every quarter for the last 3 years. And this is a stock you should own. It's pulled back. It's a great opportunity to add it to your portfolio. That's Argenx, ARGX. I got a $3,200 target 4 years out, $2,000 target 1 year out. buy it here under 900, and I would keep buying it if it breaks through 900, but under 900, it's a steal. Chart couldn't look better. This is what you call a bull market chart. That's Argenx. All right, last one we have is Palantir, PLTR. Very controversial stock, very profitable stock. This company came public at, I believe it was $16, and it ran up to 24, and then it collapsed to 8. I started nibbling on it 3 years ago around 12, bought more at 10, bought more at 8. Sold half it like a bonehead at 25, but I did hold the other 25 until it got up to about 80, and then I sold all of it, and it ran all the way to 190. At 190, it was selling 100 times revenue. That's insane. But here we are, 6 months later. They've grown their revenues 88%. They're probably going to grow their revenues over 60% a year the next 2 years. And it's finally a buy on my discipline because it's come down low enough where I can make enough money the next 12 to 24 months to make it worth buying it at 125 or less. If it goes lower than 125, I would buy more. This stock may not be done going down, but it's only going down on price. Everything else about this company is perfect. Margins are rising, backlogs rising, profits are rising, revenues rising. What does Palantir do? Palantir goes into a company and looks at the way their enterprise software system works, which was probably designed 5 to 25 years ago, and says, we see ways to improve the performance of your software and to cut the cost by 20 to 50%. We're going to bill you the hours that our people need to get the job done, and then we're going to want 20 to 30% of the savings. So they're enormously profitable. They cover their costs with the money up front, and then they make a fortune on the cut. A couple of companies who they've done this for is Delta Airlines, ServiceNow, NVIDIA. They're currently redesigning the entire manufacturing process for Boeing. If you haven't bought Boeing yet, buy it now. When Palantir gets done with them, that stock's going to become a monster. And this company has only been public 4 or 5 years, but they're 16 years old. They spent their first 12 years working exclusively for the Pentagon. These systems we have where satellites find people and we launch missiles that take out their car, or it literally goes into the bedroom window of their home. All of that finding and all of that radar tracking is done with Palantir systems. They are the smartest people in the room. Interesting statistic. A third of the Fortune 1000 have tried to implement AI upgrades. With the exception of JP Morgan, all of the companies that have tried to upgrade their internal software systems with AI have only achieved incremental productivity improvements. All the companies that have hired Palantir have seen productivity leaps of 5 to 15%, which is enormous. If you can cut your costs by 15% or 10% just by redoing your software platform, you're going to print money. And this company's backlog's enormous. They figure there's 6,000 large organizations in the world that they can help, and they've only gotten around to 400 of them. But they got a backlog of another 800 that want their help. And now all the NATO countries, their defense departments want their help so that they can have some of the capabilities that the amazing American military has. Most of the military breakthroughs of the last 15 years has either been done by Palantir or it was Palantir assisted making it happen. These guys literally know AI backwards and forwards, and they know how to implement it to get the most out of it. The stock was way overpriced when it was up around 200. But now that their earnings and revenues are up 80%, I can justify the target prices I have. using a 60 multiple. I think they're going to make more than $4 a share in earnings in 2028, and I think they're going to make more than $10 a share in 2030. And that's how I get 320 for 2030. No, I'm sorry. Yeah, that's how I get $320 in 2030 and $240 in 2028. So that's PLTR. Those are our 3 buys today. Again, this is not advice. It is education and entertainment only. Before acting on these stocks, please consult a professional and make sure it's a proper stock for you. See you down the road, folks. Thanks for tuning in.